answering your tough financial questions for the past 26 years. It's Allworth's Money Matters with co-hosts Scott Hanson and Pat McClain. Would you like an opinion on a financial matter you're dealing with? Whether it's about retirement, investments, taxes, or 401ks, Scott Hanson and Pat McClain would like to help you by answering your call. To join Allworth's Money Matters, call now at 833-99-WORTH. That's 833-99-WORTH.
Welcome to Allworth's Money Matters. I'm Scott Hanson.
I'm Pat McClain.
Glad you're with us. Our first... well, it's not the first of the year, but we did a best of the first Saturday of January 2021, and this is not a best of, and we're glad to be with you because But both myself and my co-host here were both financial advisors. We've been financial advisors for 30 years, and this has got to be it, Pat. The financial markets have the most perplexing time that I have ever experienced.
Scott, I will never again ever say I've seen everything because what I saw this week. I just couldn't understand it. So you're watching what's happening on Wednesday, right? The storming of the Capitol. And then I'm going back and forth watching that, during the workday and then watching the markets to see how they're reacting.
And it's like nothing.
It was like, it was, and then later on that day, and finally, the House confirms and the senators from Georgia, and you would think, right, because there was all this talk about a Democratic administration, Democrat-controlled Congress, and presidency, and how it's bad for the stock market. And the next day, Thursday, everything's fine.
Well, Pat, I think my statement, this is your statement, the most perplexing time. You would have stated that before this week, because if you look at what transpired last year, 2020, particularly the fourth quarter, it was it's a little mind-boggling, and I mean, there's lots of explanations. Like, okay, well, part of it is because there's no other real options, right?
Lack of alternatives.
Where I got to put my money somewhere. Some of it is momentum investing. Well, I see it keep going up, so I'm going to jump on it. I feel like a fool if I'm not. Then there's all these. There's people have excess time.
That's right. That's right. And younger people are now entering the market because of applications like Robinhood and other applications.
I don't call them investors. They're speculators.
Well,
they're learning.
They gamified investing for younger people.
Trading.
Correct. Not investing, trading. They gamified it.
Full on.
Yeah, with balloons and celebrations and notifications but Scott, it just reminds me again, and I have to tell myself this all the time. You cannot time the market based upon external forces because I have an opinion on what I think is going to happen based on what's happened externally to the markets themselves. And I'm almost always wrong, which is why I don't time the market.
Same thing.
Right?
It's one of the benefits of frankly, of getting older and having experience of investment, right?
And having that discipline.
Because there's nothing like experiencing these things yourself. There's nothing like having personal losses in a down market and seeing what that happens to your personal asset, right?
And then living through it until they recover and then some.
And then some, of course, and then some. The markets have always gone higher.
Historically have always gone higher.
But the thing that's look, if you look over the long, we all have three options with our money, essentially. We can lend it out.
Which is, you can put it in a bank account, right?
That's
what are you doing? You're lending it. You can buy a bond. You're lending it.
Interest rates are very low on lending it.
Yeah. Although the 10-year Treasury went above 1% this week.
So you can loan it. You can own things that produce, like real estate, like companies that produce goods and services. or you can speculate. Buy an option on this. Planning on, I'm going to own gold for a period of time
Or
until
you
I can
can
sell it.
Or you can spend it. You can consume
Or you can
it.
spend it. Okay.
You can consume it.
But from as far as your savings, I mean, those are your options. And the thing that is worrisome right now is I think there's a lot of people that are buying investments, owning investments, things that produce, that there's no, they think of nothing of what the future might be and how realistic the current price is for it.
Let's use Tesla as an example.
Now, I think Elon Musk is brilliant.
I think he is absolutely brilliant. And a great salesman, by the way.
Well, that's what makes him so unique. I mean, how many people? I mean, he knows how to. I mean, he's in the area that the government is throwing billions of dollars at
in subsidies.
Yeah, he somehow created a cult-like following where people almost think he's a god.
That's right.
And he's. And I mean, and he creates a great vehicle.
But
apparently, I don't know.
If you look at the last three ventures, the solar company, government subsidies. SpaceX, government subsidy.
Yes.
Tesla, government subsidy. Brilliant. But if you look at the valuation of that stock...
But I don't actually think he's motivated so much by the money. He's just a really odd guy. I think he's planning on going to Mars with his family when the Earth falls apart.
All right, we're going to miss him.
But
much like the state of California.
But the question is, how much is his company worth?
So if you look at the value of the stock versus the amount of cars that they sold every year... The stock is worth over $1 million for every car that they have sold. $1 million is what the stock is worth for every car that they sold. Let's compare that to General Motors. General Motors stock is worth $9,000 for every car that General Motors has sold in the last year.
So General Motors probably makes $1,000 on a car, and it's trading 9 times earnings. My God, I mean, it's probably somewhere in there.
And Tesla makes less than that on every car they sell. Right? But the stock is trading at an astronomical...
1 million times per car. That's unbelievable.
When you look at this, you think, well, why is this? Well, don't pretend for a minute that Mercedes, Volkswagen, General Motors, Ford, every other company... It's all speculation at this point in time. There's no longer investing if you're buying Tesla. You're not investing. You're speculating.
Well, you might be betting that he's going to be the next Jeff Bezos and is going to go into a bunch of different types of industries.
Okay, I'll give you that.
I mean, because his market, I mean, I don't know how else you justify that price.
But even if you were high on all the technology stocks, let's just say I'm the average 55-year-old and I've got my retirement savings set up and I'm like, I am really high on Amazon, Apple, all these individual stocks. And I go out there and start buying them individually and I own the S&P 500. I have doubled down because I already have quite a bit of exposure through the S&P 500 to those stocks.
It's just I mean, last year, the hotel industry, their stock performance as an index, positive.
In 2020.
Right. Like did this huge financial loss that they've suffered, did not impact the value for investors? No. Which means investors are willing to pay all that much more for future earnings, apparently.
Yes, that's what it would tell you.
That's
what it would tell you as a lack of alternative. I don't know, Scott. All I know is that this week just reconfirmed again to me that you cannot time the markets. Because I fully expected when I saw people breaking into our state, our federal government,
the capital,
right? The cradle of democracy.
And you've been there. I've walked. I've been down in the
I've had lunch
chamber.
in the congressional dining room. I mean, and the whole time I'm thinking, I cannot believe this is, third world government, and the whole time I'm thinking these markets are there's got to be
nothing.
I mean, not even a road bump. Not even a. I'm
But here,
speechless.
look,
and by the way, it was I'm sure many, many, many Americans felt the same way. How disappointing and disgusting to watch that throughout the day on Wednesday. It was, yeah.
Yeah, I was listening to a talk show. There was a person who was there at part of the protests, and he was trying to explain his view. But then the radio show got that. So did you go into the building? He said, no, I didn't go in. I stayed outside. And then the host was like, well, then obviously you didn't fully support those who did, because something in your head said this is not right for me to go in at this time.
And what did he say?
Well, I had to agree. I mean, of course, intellectually, it would be dishonest otherwise, right?
Yeah.
But anyway, this is we're not going to talk too much about the political stuff because you get that enough everywhere else. But we will, obviously, our opinion on what's happening with the financial markets, and we'll take some calls here in a moment here at Allworth. But I think if we can learn a few things based upon investments for 2020, that outside influences may or may not have an impact on the value of your investments.
Correct.
Over a short period of time. May not. There can be a complete 100% disconnect between reality and your current investment value.
Over a short period of time.
Over a long period of time.
What drives the investment value?
Things like to talk about, things revert back to their mean. They get back to their normal averages. These outliers only happen periodically, and things tend to get back to their norm.
Which is how bubbles are created. The reason they call them bubbles is because they look like a bubble, which means that they come back down to their averages. Right.
That's exactly. That's why it looks like a bubble. Yeah, you look at it on the graph.
Right. That's why they call them bubbles.
The price goes up and then goes back down. That looks like a bubble.
And then you'll hear this. Well, what's going to prick the bubble? What's going to make it? No one knows, and no one knows when it's going to happen. And the further you get into a bubble, right? The further you get into it, away from the average, away from the mean. The greater the probability of it coming to its mean.
It's just so strange when the fourth quarter, just about every asset class went up. Every asset class. Well, you could look at commodities, up. Commercial real estate, up. I mean, everything.
Yep.
At a time when COVID deaths were also going up. I mean, it's like lockdowns are going up. And it's just a strange time.
Commerce is...
It's a great time to rebalance. If you haven't rebalanced your portfolio in a while, do not let those winners run too long.
Yes.
At least, if you started 2020 thinking I'm going to have 60% of my portfolio in growth and stocks and keep 40% in more conservative things, you're probably more like 66% today. The prudent thing to do would say, hey, why don't I get back to where I was before?
And Scott, what if you don't even know what you just said? What does that mean?
Well, go talk to a good financial advisor.
And they will do it for you. They'll charge you a fee, right? And you'll be more than happy to pay that fee to make sure your portfolio is well balanced.
Well, studies have shown good quality advisors earn more than their fees. There's both Vanguard study and Morningstar study. But in any case, let's take some calls. We will... Yeah, and if you don't want to call, we'll keep talking because we have a lot to talk about.
That's normally when people call.
Anyway, to join the program, 833-99-WORTH is the number to be on the program. 833-99-WORTH. Would love to take your question and your call regarding your financial matters and get you set well for 2021 and beyond. And we're starting with James. James, you're with Allworth Money Matters.
Hi, Scott and Pat. Thanks for taking my call. Long-time listener, first-time caller.
Oh, good. Well, thank you.
So my questions today are around retirement. I'm looking forward to retiring maybe within the next year or two, and just want to lay out my wife and I position and get your thoughts on
Perfect.
things. So where would you like to start?
Fire away, wherever you'd like to start.
Okay.
Not like back to your
60,
childhood.
No, not like that. Let's see. I'll be 60 this year. My wife will turn 61 later in the year, or 60 later in the year. I currently work at a state job, public safety retirement. I'm looking at retiring anywhere between 36 and 39% of my pay for that. I am fully.
So did you change? Did you change careers from private sector into safety in the last 12 years or something like that? Your late 40s?
I did. Yes.
All right.
Go ahead.
That's interesting. I mean, not very. Are there many others like you that in their late 40s going to?
Well,
what line of work? You police, fire?
Yeah, law enforcement.
All right.
My guess would have been corrections.
No.
Okay.
No, I'd rather put them in than live with them. So anyway,
That's not funny, Scott. That's insensitive.
Okay.
Well, it's just reality, anyway.
So,
in my opinion, but
are you putting money into the 457 or 401k as a public employee?
I am very minimal, and the only reason I'm putting minimal in there is to roll over deferred compensation when I do retire.
Okay, thank you.
In the private sector, I have been doing 401k, for over 20 years. So in that account, between my 401k and a Roth, we have about $870K in that. And my wife and I both are eligible for Social Security. At 62, I would be collecting about $2,000 a month, and she would be collecting about $900 a month.
And does your wife work now?
She does. She runs a small daycare out of the home.
Okay.
Making the big bucks.
Well,
I'm joking.
And I assume your home is paid for?
no, our home's not paid for. It's worth about $700, and we owe about $230 on it.
Okay.
And will you stay? You're in Northern California. It looks like. Will you stay in Northern California when you retire?
More than likely, our first grandkid and our daughter and husband moved back from New York amidst COVID, which is the only good thing about COVID. Yeah. And so we're probably tied down here now since our grandkids will be here.
Yep.
Okay.
And what's your annual pay now?
Thank you, Scott.
Gross or net?
Gross.
About $9K a month.
And that's between the both of you?
No, that'd just be mine.
And what's your wife's?
Hers varies between $2 and $3K a month, depending on how many kids she takes in.
And does she want to retire from that as well?
Yeah, we're looking at both retiring at the same time.
Okay.
So there are some other equations in here.
Okay.
I opened the 457 with the state only as a vehicle to roll some deferred comp in, and I'm looking at on retirement, I'll probably be right about $70,000 that I can roll over into that account. We also have some cash value life insurance policies that we're probably going to get rid of when we retire, and between the two of those, it'll probably generate about $35,000.
And your mortgage on your house, have you refinanced that recently? We
did, yeah. We refinanced
30-year?
the low threes. It ended up being like a 28-year loan.
Okay.
And
all right.
we've been paying extra on that, and that was one of my questions too. If we don't plan on selling the house and remain in the house, should I even dump more money in on the principal?
I wouldn't bother now if you're a year away from retirement. The key at our kind of philosophy is it's great if you can get to your retirement with your home paid off. If not, the key is at retirement. Let's do whatever we can to make that payment as low as possible. The fixed payment as low as possible, right?
Right.
And it's going to obviously be pretty small relative to your income. I mean, from first blush, it looks like you guys are in pretty good shape.
So if you both start Social Security at age 62, right? So I went through some of the numbers. I ignored the cash value life insurance policy. You're going to receive approximately $40,000 a year in your pension. You're going to receive approximately $36,000 a year in Social Security, so that's $76,000. If I take a 3% distribution off your $940,000 in your 457s and 401ks, so I took that $840 and added the $70 that you had mentioned about there, we put you at $27,000, so that brings us to $103,000. And assuming that you were putting money into Social Security, you will maintain a very similar lifestyle based on the income of 138, but it will be diminished by about 10 to 15%.
How much are you putting in your 457 right now? What percent? Do you know?
It's a $50 a month, and like I said, because we're still contributing to my wife's Roth IRA, and then we have another IRA that's just a traditional IRA, not a 401k, but we're putting about $150 into that a month as well.
So, and how far away is retirement? How many years?
Well, that's one of the purpose of my call. I want you to tell me I can retire today.
Well, okay.
You're not going to be able to retire today.
Okay.
If I were you, I'd actually sit down with an advisor and actually have look. Quite frankly, people pay us to come in and do plans just like this. And in fact, I'll tell you, 100% transparency. I have some relatives that have been asking me, "What do you think? When do you think I could retire?" And I'm like, "Look, I could do a on the back of a napkin and tell you." But I said to him, I will pay out of my own pocket for you to visit the firm that I am the principal and co-CEO and have a real financial plan done for you so that you can get the real answer to the month, to the date, and be comfortable with it rather than me sketching it out on the back.
Yeah, of course.
And so I did it with my own relatives. Unfortunately, they said the right thing, Pat, which is we appreciate that, but we'll pay for it ourselves. Which, thank you, relatives.
At least they didn't say we'd rather use a different firm. Thank you very much.
Well, I think that was always a possibility. So my guess is, just from what you told me, you said you're 60 and your wife is 61?
No, she'll be 60 in September of this year.
And how old are you?
I'll be 60 in March of this year.
Okay, so you're not going to be able to retire prior to age 62. But my guess, if I was your advisor sitting in the room with you, the optimal date would probably be when you're 63, 64, maybe even 65.
Well, the nice thing is you go through this process and you can play some what if scenarios.
That's
like,
right.
What if I worked another 6 months or another year or 2 years? I mean, and from a financial standpoint, work to the day you drop dead, right? Never retire. But that's not most people's goals is like they don't want to die. Their goal is not to die with as much money possible. They want to have some quality of life along the way.
What we do know is that in order to maintain your standard of living, you need that Social Security.
Yeah.
And you don't have a high enough 401k or IRA balance to bridge you over to that. So at a minimum, it's not until you're
maybe you missed that. I do, between my wife's Roth RIA and my 401k, we have about $870,000 in that.
I got that.
Okay,
I got that.
Okay.
So, but what I did
which is good, and we're not discounting that. It just look, when we're in an environment when the 10-year Treasury bond pays 1%, like. Mm-hmm.
That's why I
remember back when in the 1990s we would use 8% as a kind of a growth assumption, right? And looked at the last 50 years, 10% was realistic on a balanced portfolio. It's a different world today.
So because equity rates of returns they don't live in a vacuum. They're affected by what the 10-year Treasury is actually trading at over a period of time, right? And there's the deviations away from that. So the question that you asked started with is, can I retire? You're not going to be able to retire. I can say this confidently until you're both eligible for Social Security. And even then, my guess is that you should probably add at least a year to that.
But go through the process. I mean, the best thing you can do is go through a process with you and your wife.
Or you could download your own financial planning software and not have an advisor and actually do the what ifs. But an advisor a good advisor knows what questions. A bad advisor would actually just see you and say, "Hey,
you need an annuity."
Or you can afford to retire today.
Yeah.
Roll your money over into an IRA.
Yeah.
I mean, that's what you don't want. Obviously. So, the only advice I could give you is the same advice that I gave my relatives who are of similar age. And I am an advisor. And these are my own relatives. But I said, look, I'm not objective enough about you.
Well, the only offer you didn't give me is to pay for it.
Oh, that's not happening. Yeah, James, I'm not. Listen, I appreciate your public service and all, but I think I've given enough to public service already.
Yeah, I hear what you guys are saying. If I could just, what are your thoughts on long-term health care?
Oh. You mean the buying a long-term health care insurance policy?
Yeah.
Or long-term health care? Because most of us are going to require some sort of long-term health care. The question is, how do we finance it?
The policy.
The challenge is, and I think it's important that you have a plan in place. Like, how are we going to address this? You just look at the statistics. You'll probably choose the route that you're going to self-insure. You might say we should look for some sort of policy in the event that we've got a prolonged illness that takes multiple years. The challenge is the long-term care policies are so dang expensive that and it's changed a lot over the last 20 years. People look at it now and they're like, that is just a lot of money for a little bit of benefit.
It was offered to you as an employee of the state of California under a reduced, and then they came around, and you've watched the lawsuits come around this with the policyholders suing the state of California over this. You need some. The question is whether you're willing to pay for it or not. So,
yeah.
and a good advisor will address that.
Going through this planning process, you'll address all those things. And I mean, on our website at allworthfinancial.com, there's our 7 personal decision points for retirement. It's all these issues that you need to consider as you face retirement, and it'll help you walk through that as well. So, appreciate the call, James, and wish you well. If you want to join the program, 833-99-WORTH. This is Scott Hansen and Pat McClain with Allworth Financial. We're going to take a quick break. We'll continue on with calls, so stick around for more.
Can't get enough of Allworth's Money Matters? Visit allworthfinancial.com/radio to listen to the Money Matters podcast.
Welcome back to Allworth's Money Matters. Scott Hansen.
Pat McClain.
And if you want to be part of our program, we'd love to take your call. 833-99-WORTH is our number. And like many people, we are actually in the studio, which we come into. That's the only time I ever come into the office anymore.
Yes. Oh, although I just saw, this was in USA Today, and this was on the 5th of January. So on a survey, 29% of working professionals said they would quit their jobs if they couldn't continue working remotely.
I wonder if that's really true.
According to an online survey of 1,022 professionals by Live Career. Now, it's easy to say that when you actually have a job and you're working remotely because you think you're in the driver's seat. But I don't believe that 29% of working professionals would actually quit their job if they had to return to an office.
There was a great podcast on Hidden Brain in the last couple months.
I do enjoy the Hidden Brain.
He was a professor somewhere that he spent his career on productivity from people working from home. And of course, now he's got the best studies possible, right?
Right.
But so he's probably the foremost expert on work from home because his whole career has been studying this stuff. And basically, it kind of comes down to there's going to be kind of some fringe people that want to go in the office all the time, 100%, and some fringe group that's going to be work from home 100%. He's like the majority. It's going to be
a combination of the two, which is actually where I see it going.
I do too.
And I like it.
I do too.
Right? I don't want to be at home all the
transparency, our work schedule was a bit like that prior to this.
Yes.
It was work from home and work in the office. I'd come in the office 2 or 3 days a week. I'd work from home.
But there's no travel now. I kind of miss the business travel a little bit.
Oh my gosh, that's funny. I just told my wife that. When the first few months into the pandemic and Zoom was so efficient, I said, I'm hardly going to travel at all anymore. This is unbelievable. Now I
kind of miss it.
I told my wife I can't wait to get back on a plane and go meet with some people.
But then 9 months from now, you're going to see.
I know. Well, you can't show up now.
Yeah, but but if you were allowed to travel, what I think that we're going to learn from all of this is that we can be more efficient with some of the things we knew, but efficiency and mental health are not one and the same.
That's right. Well, I've always known I'm an extrovert. I re-energize around other people, and this has been not my favorite season, but that's okay. All right, let's continue on with calls. 833-99-WORTH to be part of Allworth's Money Matters. We're in New York talking with Jen. Jen, you're with Allworth's Money Matters.
Hi, good afternoon.
Jen, are you in New York City?
I am. It's afternoon. Yeah.
No, I just...
and Happy New Year to you.
Have you been in the city the entire time, the last 9 months, 10 months?
Pretty much, yeah. I'm a New York City public school teacher.
Oh, thank you.
God bless you.
Yes. It's...
what grade?
Yeah. So I'm a counselor, and I interact with the students both in a workshop setting and interacting with them to get individually to get college applications out and things like that.
Thank you. Having 4 children that have been in the stages, it is not an easy time. I don't need to tell you that, right? And because there's so many unknowns, and in this environment, it's especially difficult because no college visits,
Absolutely.
right?
I feel
yes, well, virtually, but yeah, absolutely.
the younger generation's got the brunt of this thing, I think.
So anyway, thank you. Do you have a financial question, or do you want to continue to talk about this?
So I do. So I started, I'm in the midst of starting an online commerce. Is in the midst of all of this, as if I didn't have much to do, but decided that I was going to do this. And it's a drop shipping, e-commerce, selling inspirational cups, mugs, things like that. And I have no experience in this at all. Like I said, my background is in education and science and counseling and what have you. So I am starting with no experience, blank. And so this particular company, and I won't incriminate the guilty, that they could help me for thousands of dollars. And I said, no, I could do this myself.
You're right.
I do need some help.
Yeah.
So
You're right.
I know that there are things. Yeah, I know that there are some companies that can help form LLCs and can help with the formation, but I think that they don't do helping with compliance and things like that, and of course tax information, things like that. So I said, let me call and
let's just
you guys might advise.
Let's just find out how big of a building we're building before we actually dig into this. Have you sold anything yet?
No, actually, I haven't.
You haven't sold.
I have to put. No, I actually have to open the store. So I have my product.
Okay.
And but so selling. I haven't sold anything.
I think Pat's point is like we can spend time in one or two different areas right now, right? We can spend time on let's getting all the business stuff figured out so it's all worked perfectly. We're 100% in compliance and everything. We've got everything I's dotted, T's crossed. We are nice, crystal clear. We're ready to go. Or we can spend time on let's see if I can't sell some stuff.
And let's actually see if this is viable first rather than I've heard this term entrepreneurs. Scott and I talk about this all the time. People call themselves entrepreneurs, right? I've been called an entrepreneur. I don't call myself an entrepreneur. But I have started more than Scott and I have together started more than a couple businesses. Some of them have been fabulously successful.
Not all.
Not all, right? Not all, because that's just the nature of business. I wouldn't even form a partnership or an LLC or an S Corp or anything else. I would get a name to the business. I would get whatever the local business license needs.
Yep.
And then I would actually track on QuickBooks or Quicken all my expenses. My guess is that you're not going to actually make any money for the first couple years.
Set aside maybe 30% for taxes and stuff, just
of your net profit. So I would just worry about a local business license, and then I would keep meticulous notes about expenses. How much were the cost of goods sold? What was the profit? What was the money in? What was the money out? And I wouldn't worry about any of the rest of that. In fact, I wouldn't worry about any of that until I had net profit of probably over $15,000.
And you're not manufacturing a product, right?
$15,000 net profit. And just as Scott said, put 30% aside of net profit. And by the way, I hope you make hundreds of thousands, if not millions of dollars doing this. But I wouldn't worry about the stuff that doesn't matter right now. And all you really need to do is make sure you've got a great storefront, which is your website, that you actually understand what you're paying for and what you're selling, and that there's a difference between the two, right? and how to run the business. And then once you start making money, then we'll discuss whether you should form an S corp or an LLC. Or
I don't know if you've read the movie Shoe Dog, the founder of Nike. It's
you read the book or seen the movie?
Never
Is
heard
there
of it.
both?
Is there a movie on?
Well, you said read the movie, which would be
Read the book.
Okay.
I don't know if there's a movie or not. Read the book Shoe Dog. And the reason I like that book is because everyone knows Nike. Everyone owns some Nike apparel of some sort. And it's kind of the fake it till you make it, right? It's like you don't have all the answers figured out. You just keep pushing forward and you're selling stuff that you're hoping you can deliver on your promises. And I mean, part of it is that's what happens when almost every successful business kind of starts scrappy.
I mean, we all come from somewhere. So I wouldn't worry about any of that. You don't need an outside firm. What you do need is...
You don't need an outside firm.
You need software. You could do it in QuickBooks or Quicken. I don't know if you're familiar with either of those, or some other online, place where you can keep track of your expenses.
Depending on how much stuff you sell. I mean...
You could use Excel if you wanted. Yeah. But the rest of the stuff, forget it.
Okay.
I wouldn't overcomplicate it.
Okay.
I wouldn't. And
because you're selling products that someone else manufactured, right? On an online platform, Etsy or one of those, right? I mean,
Yes.
Yeah, you're good. You're good. Yeah. And you better enjoy it. By the way, Jen, you better enjoy it because you're not doing this for money. If you were doing it for money, you'd actually go back to what you do for a living and roll outside of the public school district.
Yeah, this is definitely a side hustle, something that I like making inspirational quotes and things like that, things that I read and what have you. And
well, the side hustle is not exactly an inspiring quote, just to let you know. The term side hustle.
But Jen, because if you were doing it for money and you were my sister, I would say, well, maybe we should look at college counseling outside the school districts, which is what your background is in, right?
Yeah, I've thought of that as well. I definitely have thought of that as well as a way of as a potential.
She might actually really love teaching students and
oh no, that's what I said. For the side business, for her side hustle, you better enjoy it because the likelihood of you making lots and lots of money on this is not
much better
super
opportunity. For most people, they have a much better chance of making higher income in their own career.
That's right. That's right. And I don't want to come across as a demotivational coach at all. Anyway, good luck to you.
Yeah.
Thank
you very much.
Yeah, good luck. Thanks
gentlemen.
Yeah,
if I was a demotivational coach, right? People come to me with their hopes and dreams.
That's what this was. Yes.
No,
you don't need any of that crap. Just go sell something. Actually, don't even sell something. Why don't you go do this instead?
It sounded a little bit like that, didn't it? Right? My saying, my demotivational coaching company is where dreams die daily.
Daily. I remember we had a guy we worked with had a bunch of those posters. Not the motivation ones. They were all demotivational.
Like with the ones with the pictures where it had the salmon swimming upstream and the bear was eating it. And an
unfortunate day or something.
No, the quote was, sometimes a journey of 1,000 miles ends very, very badly. Remember it.
I do.
And then there was a piece of wood.
It's the bear eating the salmon.
The bear eating. Sometimes a journey of 1,000 miles ends very, very badly. And then the ones with the with a piece of wood and nails in it, and a hammer coming down, and all the nails were bent over, and it said, "There's no end to the amount of damage we could do if we all work together."
You remember all these?
Yeah, it was part of my Black Cloud training. That was my demotivational companies.
All right, let's continue on here with some calls. By the way, Allworth, we're both part of Allworth Financial. We're a financial advisory firm. We getting up pretty off topic today, which is good. We're going to talk with Norma. Norma, you're with Scott Hansen and Pat McLean of Allworth Financial.
Hi there.
Hi, Norma.
Hi there. I'm calling you for some motivational advice.
Okay, thank you.
Anyway, I've been listening to you for quite a while, probably over 10 years, so we go way back, and I've learned a lot. But I'm going to start with, I'll just give you my background. I'm 65. I'm a recent widow.
Sorry.
I retired April 2020, right after COVID. And so
And when did your husband pass away?
My husband passed away. It's been 2 years now.
Okay, sorry. Yeah.
And so it's a new chapter for me, and I've worked for 40 years for a utility company, so I do have pension. So this is my question. I'm starting a new year. I'm excited, but at the same time, I have to really start doing some tax planning. After all these years, I have a 401k, I have a TSP, I have a Roth IRA. In those 40 years, from listening to both of you, I invested conservatively, but over a 40-year period, I have a nest egg. The question I have is, and it's to both of you, whoever wants to answer, is I'm curious, and I've heard you talk in your show about donor-advised funds versus charitable giving versus, I'm at a point which I'm thankful, but my tax, I used to be in the 22% or 26% bracket, and I now have a windfall at this stage in my life. My husband recently passed away, and I also get his Social Security.
And Norma, so you have a thrift savings plan. Was your husband employed by a state or government agency?
He was, yes.
And
he also had a 401k. Yes.
Okay, and then did you receive a survivor benefit pension from that?
I did.
Okay. All right. Thank you. And
so you have your own pension. You've got your husband's pension, his Social Security,
a 401k, and a TSP. What's the TSP balance?
The TSP balance is $180,000.
And what's your?
I'm sorry.
Oh, and keep going.
Okay, so I'll just give you just a rundown, a high level. I totaled everything up with the 401, the 457, and the Roth. It's roughly 1.2. I have a brokerage account, which is about $400,000. So the question I have is, I'm in a different tax bracket now. I never thought I would be in this tax bracket, but I'm just wondering how perhaps you can give me some guidance on some tax advice of what I can do to minimize my taxes.
So you started by talking about some charitable stuff, right? So
yes, I was listening to you a while back, and I remember you had a segment on there's charitable giving, there's donor advised, and I've been looking that information up to see if that would help reduce my modified adjusted gross income since I'm no longer working. There's not much that you can really write off in taxes outside of
and
your home.
Charitable giving is still one of those areas that you can give. And it doesn't impact your modified adjusted gross income, but it does impact your taxable income because it's an itemized deduction that flows through on the second page of a tax return. But
are you giving money to charities now?
I write checks to my local, my local charities. It's not a lot, but it's maybe a couple $100 here and there. But as I was reading the information of charitable giving versus donor-advised funds, it seems like, and correct me if I'm wrong, the donor-advised funds, does that help your modified adjusted gross income?
Well, it's a tax deduction as an itemized deduction. So I think as the CARES Act or one of the acts from COVID, I thought $300 or $600 that someone can deduct in addition to a standard deduction, but
not much. But the reality is it probably wouldn't work for you, and the reason is you normally in a donor advised fund or if you're gifting appreciated.
Well, it would work if she had a charitable, if she really wanted to give some money to a charity.
But even then, Scott, she got a full step up at basis at the death of her husband. Yes. On the brokerage account. So she doesn't have a whole lot of highly appreciated.
But she can still give
There most certainly she could still give, but it's not as if they own the asset for 25 or 30 years, and let's say it had a cost basis of 10% of the value.
Yeah, I understand.
Would have a lot more value.
Yeah, then it's the tax savings can be so massive that it like.
Yes. So if you're going to give, you most certainly want to give with any charity, and whether you use a donor advised fund or not, but.
And you're at a point, I mean, depending on your tax bracket, and you're in California?
I am.
Okay, you're in California. So
California.
you're probably, for every dollar that you give, you probably save 35 or 40 cents on taxes.
But that wouldn't be my concern. If you were sitting in my office, the first thing I would zero in on is Roth conversions. Because you've got an IRA of $1.2 million. You have more than enough income. You've got a window of 7 years to convert from your regular
She's already
IRA.
in a high tax bracket. We don't know the whole story, but.
Well, it's funny you should mention that because, I had someone do the spreadsheet on the Roth conversion. And, when you pull that money out, it's a tax event. And then it puts me, that's just what my accountant said, puts me in another bracket.
That's right.
Right, but the question is, what bracket are you going to be in 10 years from now when you have the required minimum distribution?
That's right.
So I think it's just like if you want to if your main goal is to reduce your taxes, then we look at those areas. If your main goal is I would really like to support these particular charities and reduce my taxes.
I think the latter. And the other thing also is, which I didn't mention, but I have cancer. And so, and I have a daughter. So I'm hoping, from a long term, I'm hoping that I'll be cured, but you just don't know. So when they did the spreadsheet, they said my break-even point would be 10 years.
Yeah. And then,
sounds right.
Okay.
And so my thought was, okay, I don't even know if I'm going to be around 10 years.
That's right.
So that's the risk that you take. I have a daughter who works out of the country. She's gainfully employed. She will plan to come back here. She's 25. She rolls off of my insurance when she turns 26. So my thought was, hey, can I get some medical insurance for her, and can I write that off? But once she's 26, I can't do that, can I?
Well, you can pay for her medical insurance, but you can't take a write-off.
Yeah, which is really what you should be doing.
But here's
if I were your sister, Scott, what would you do?
Thank you. So here's what if you were my sister, I'd say, look, we need to plan for two different courses. Let's plan one course that you beat this cancer and you live a normal life expectancy. Mm-hmm. Then let's say, all right, if that's the case, what's important to you? What are the things you'd like to accomplish? You've got probably more money than you thought you would have at this point in life. That is my guess. And you're at this point in life, you thought you were going to have your life partner with you, and he's not with you.
That's correct.
Right? And so you're like, now you're looking at this future. Yeah, I don't know what the future, and now I got cancer on top of it, right? So that's what you're dealing with. Like it's your future is very cloudy. Mm-hmm. So I would say let's look at two plans. One plan is you beat this thing, you live a normal life expectancy. If that's the case, what are those things that are of value to you in life? What are those things that you'd like to accomplish? Some monetarily, some not, obviously. But then how can the money help in those things? And charity might be one. You might say, I'd really like to help support this particular cause, these particular types of people. And that's a wonderful thing.
Yes.
And that was plan A. Plan B is that we don't have a normal life expectancy and that we pass away much earlier than we were hoping. And what would you like to see of your legacy of these dollars anyway? How would you like to see these? And
should we put guardrails around, if you do pass away, should we put guardrails around how your daughter is going to spend the money?
Exactly. Now,
I have a 25-year-old daughter, and she was poking me the other day. She wanted to kind of see how much she might get in inheritance.
These kids, this generation, isn't that funny? We don't even have one foot in the grave yet, and
I don't think she's trying to chase me out. But she did tell me. And I said it struck. I said, "There's not enough for you to never have to work again because I think that'd be disastrous for you." Yes. And I said, frankly, if Mom and I died today, it would be structured in a manner where there would be an independent trustee would decide how much money you can get out of the trust each year.
Right.
So that you don't do something stupid. She says, good, because she told me, good, because I'd probably make really poor choices if I inherited a bunch of money right away.
Well, I think when they're young, and I do have a trust, and it is, my husband and I set up.
When was the last time you reviewed it?
I'm going to have to update it because my husband's been gone. This year will be 2 years. And so, yes, I'm going to have to.
So you're my sister, Norma.
You would,
yes.
You would put guardrails.
If you were my sister, like Pat had said to his family member, like, go talk to one of our financial advisors. Get to do some. That's just like you've got specialists that helping you in the medical field right now.
Yes.
And maybe you've done all this stuff on your own. Like I wouldn't be doing this today. I've been doing this 30 years. I wouldn't continue doing what I do if I did not believe in my heart that it added value to people's lives. I would go do something
absolutely.
else. So
and
I would strongly encourage you to meet with, if not one of our advisors, then some other fee-based advisor. And it's really about going through this planning process. And then you'll figure out from there what you need to do with the trust or not do with the trust.
Yeah, but most certainly, my guess is you're going to put guardrails on the trust as to how the dollars are distributed. And an attorney or financial advisor can help you set up those guardrails. And it's all dependent upon the kids.
And you might say, I don't want my daughter to have all this. I'd like to have some portion to go to this particular thing or that particular thing, or this certain thing helped me one time, whatever, right? If there's a charitable...
she's going to be just fine. She's gainfully employed. She's very capable. And but just so that you know, I am one of your clients, and I've been very, very happy with your company. She's outstanding. So.
Okay, well, I appreciate it. Unfortunately, we can't take testimonials from clients.
I know it.
So we have to follow this with, if you become a client of Allworth, your experience may or may not be the same.
It might be absolutely horrible. And you might hate it.
I would hope not. But Norma, but go back and visit with your advisor and have these discussions and
real honest conversations.
That's right.
I mean, you got to get real.
And so, Scott, I have 4 children, and the disclosure of what's happening with my wife, and I'm only 58, to the kids is 100% transparent. I mean, just because I have a different view of it than you do a little bit.
Yeah, well, my son doesn't want to know any dollar amounts or anything. He said, I'm just going to pretend like there's nothing ever for me.
Well, that's what my children said, too.
But not my daughter.
No, she's like...
She sends me texts every day. She wants me to buy her a new Toyota 4Runner or something.
Good for her.
She's 25. Go find your own.
Good for her.
Anyway, we're out of time. If you haven't been on our website yet this year, there's lots of great stuff on there, including our 5 not-so-obvious times to call your advisor. You'll find that at allworthfinancial.com. We'll see you next week. This has been Allworth Financial with Scott Hansen and Pat McLean.
This program has been brought to you by Allworth Financial, a registered investment advisory firm. Any ideas presented during this program are not intended to provide specific financial advice. You should consult your own financial advisor, tax consultant, or estate planning attorney to conduct your own due diligence.